Welcome to this discussion from Generous Wealth Management. Today, we are pulling back the curtain on one of the most important aspects of your financial plan, how your advisor gets paid. By the end of this discussion, you will understand the difference between commissions and fees, how to spot potential conflicts of interest, and exactly what questions to ask your advisor. I'm Lee Generous. In the financial world, compensation isn't just about a paycheck. It's the primary driver of how advice is delivered and which products are recommended. If you don't understand how your advisor is compensated, you might be missing the context behind their recommendations. Let's start with the traditional model, commissions. Commission-based advisors earn money when they sell you a specific financial product, such as a load-based mutual fund, an annuity, or a whole life insurance policy. These advisors typically work for a broker-dealer. Their primary duty is to the firm, and their compensation is tied directly to the volume and type of products you purchase. The key thing to understand here is the suitability standard. This means the product only has to be suitable for you at the time of purchase. It doesn't have to be the lowest cost or the absolute best option. This creates a structural conflict of interest. If two products are suitable, but one pays a higher commission, there is a clear incentive to recommend the more profitable one. Now, let's look at the fee-only model. As a registered investment advisor, or RIA, a fee-only firm is legally bound to the fiduciary standard. Fee-only advisors are paid directly by you. They do not accept commissions, kickbacks, or referral fees from third parties. Their compensation comes in three primary forms. The most common is assets under management, or AUM. This is usually a percentage of the wealth the advisor manages for you. When your accounts grow, the advisor earns more, aligning their interests with yours. Alternatively, some firms use flat fees or hourly rates. This can be ideal for specific projects like tax planning or a one-time retirement review, ensuring you only pay for the advice you need. Then there is the hybrid or dual registered advisor. These professionals wear two hats. They act as a fiduciary when charging a fee, but can act as a broker when selling products. This is where it gets complicated for consumers. A hybrid advisor might charge you an advisory fee to manage your portfolio, but then earn a commission on an insurance policy they sell you later. The challenge for the client is knowing which hat the advisor is wearing during any given conversation. You must be vigilant about when the fiduciary duty starts and ends. Always ask, are you acting as a fiduciary for this specific recommendation? Transparency is your best defense against hidden costs. Speaking of hidden costs, even if your advisor's fee is clear, there are internal costs within your investments. The most common is the expense ratio, the annual fee charged by mutual funds or ETFs. A 1% expense ratio might sound small, but over decades, it can eat away a massive portion of your returns. You should also be aware of platform or custodial fees charged by the firm holding your assets. You can find these details in two places, the fund prospectus and the advisor's Form ADV. The Form ADV is a public disclosure document that lists the firm's fee structure and any past disciplinary issues. A trustworthy advisor will proactively walk you through these documents. If they seem hesitant to discuss their total cost, that's a significant red flag. Here is your practical checklist. First, ask, how exactly do you get paid for your services? And are you a fee-only fiduciary for every aspect of our relationship? Next, ask if they receive any incentives to recommend one product over another. And finally, what is the total all-in cost of my portfolio, including internal fund fees? At Generous Wealth Management, we believe that transparency is the foundation of trust. You deserve to know exactly how your money is being managed and what you are paying for that expertise. Don't be afraid to be direct. A true professional will welcome the opportunity to explain their value and their cost structure in detail. To recap, commission-based models focus on sales, fee-only RIAs focus on a fiduciary duty, and hybrid models mix both. Always look for hidden fund expenses and ask for full disclosure. Thank you for joining me for this discussion. By understanding the mechanics of advisor compensation, you are taking a critical step towards securing your financial future with clarity and confidence. This video was created using HeyGen, an AI-powered video generation platform, and may feature an AI-generated likeness or voice. The information presented is for educational and informational purposes only and does not constitute personalized financial, legal, or investment advice. Compensation structures, fee arrangements, and costs described in this video are intended as general overviews and may vary significantly by firm, advisor, and individual client arrangement. Not all advisors, brokers, or financial professionals operate under the same regulatory framework, fiduciary standard, or compensation model. Some financial professionals earn commissions on the sale of financial products, which may create conflicts of interest. Others operate on a fee-only or fee-based model. Always ask any financial professional how they are compensated before engaging their services. Fund expense ratios, platform fees, and other investment-related costs are set by third-party providers and are separate from advisor compensation. These costs may reduce investment returns over time. Generous Wealth Management LLC is an investment advisor registered in the states where required. Registration does not imply a certain level of skill or training. Past performance is not indicative of future results. For a copy of our Form ADV Part 2A disclosure brochure, which includes a full description of our services, fees, and any conflicts of interest, visit www.genwealthman.com or contact us directly.